Everywhere you look, the headlines are loud: markets up, markets down, inflation rising, debt climbing. But behind the noise, a quieter, more powerful story is unfolding, a global shift. One that will reshape wealth, opportunity, and the future of financial freedom for years to come. Most people will react with fear. They'll freeze. They'll hope the storm passes. But the few who understand what's really happening, their future will look very different. Today, we're not just talking about headlines. We're talking about what's beneath them. The forces reshaping the US, China, Europe, and what you can do right now to protect yourself and grow your wealth as the old system strains under pressure. Welcome to the Passive Path. Let's begin. Section 1. The global economic landscape. Are we on the brink of a global economic meltdown? Or can you, as an individual, turn this crisis into an opportunity to grow your wealth? We're seeing massive shifts across the global economy, and it's crucial to understand what's happening and, more importantly, what you can do about it. The Passive Path is all about helping you make smart, informed decisions when it comes to your wealth. In today's video, we'll dive into the economic forces at play, from inflation to government debt, and how you can protect yourself during times of uncertainty. The economic crisis. Across the world, economies are facing massive challenges. Governments are racking up debt, inflation is on the rise, and the global financial system is stretched thin. And yet, we're told to just keep investing in stocks and retirement funds, assuming everything will be fine. But is this really the right approach? In the US, government spending has hit record levels. The debt keeps growing, and inflation is climbing. The Federal Reserve has been printing money. And while the stock market keeps climbing, many are beginning to wonder, how long can this last? While things may seem fine right now, the foundation is shaky. If the bubble bursts, the fallout could be massive. Let us break it down and look at what's really going on beneath the surface: government spending and inflation. Over the past few years, the US government has been running massive deficits. Stimulus checks during the pandemic helped keep people afloat, but those funds didn't just come from thin air. The Federal Reserve printed trillions of dollars, inflating the money supply. This money had to go somewhere, and much of it ended up in the stock market, driving up asset prices. But this also meant the value of the dollar was diluted. More money was in circulation, but the amount of goods and services didn't increase. This is a recipe for inflation. So what does this all mean for your wealth? Is it safe to just sit back and watch the market go up? Or should you be preparing for a correction? Let's explore. Inflation and the stock market. One of the key issues right now is inflation. As prices continue to rise, the purchasing power of the dollar decreases. It's becoming more expensive to buy everything from groceries to gas, and that's putting a strain on households across the country. At the same time, we're seeing a stock market that's reaching new highs. But is this sustainable? With inflation rising, companies may start to struggle with higher production costs, and that could put a cap on their earnings. This, in turn, could cause stock prices to fall. Actionable insight. So, what can you do? First and foremost, you need to be proactive. Don't just rely on traditional investments like stocks and bonds. Diversify your portfolio into tangible assets that can hold their value even when the economy isn't doing well. Consider adding gold, silver, and real estate to your investment strategy. These are timeless assets that tend to hold their value when fiat currencies lose theirs. And if you're new to these, don't worry. I'll guide you through how to start building these into your portfolio as we go along. Understanding how government debt and inflation are impacting the market is only part of the picture. In the next section, we'll take a deeper look at what's going on with China's economy and how it's affecting the global financial system. Section 2. China's economic struggles and global impact. China's economy is facing a crisis. and it's sending shockwaves through the entire global financial system. For years, China's economic growth has been driven by two main factors: massive exports to the US and an overabundance of new construction projects. But now, both of these growth engines are running into serious trouble. First, trade between China and the US is slowing. US is raising tariffs on Chinese goods, which means China can't sell as much to America as it used to. At the same time, China has built millions of new apartments, offices, and entire cities. Problem is, no one is buying them. They've overbuilt, and now the property market is crashing. Over $19 trillion of wealth has been wiped out due to falling property prices. This is not just a real estate issue, it's a ripple effect. Construction, steel, cement, and many other industries that supported this building boom are collapsing. China's population is shrinking, and the effects of this demographic shift are going to last for decades. By the middle of this century, China will have 150 million fewer people than it does today. This means fewer workers, less consumption, and a shrinking economy. The consequences of these issues are global. China's economic slowdown is impacting not just Chinese workers, but economies all over the world. As China buys less from countries like Thailand, Vietnam, and Germany, global trade suffers. This causes job losses, factory closures, and slowdowns in markets that rely on Chinese demand. The economic slowdown in China is more than just a blip. It could drag the entire global economy into a prolonged period of stagnation. But this isn't the end of the story. China is still an economic powerhouse in many ways. Despite its struggles, China is investing heavily in new technologies, leads the world in electric vehicles, 5G networks, and hypersonic missiles. This technological shift is not just reshaping China's economy, but threatening the global power balance. If China continues to push ahead in these fields, it could overtake the US in technological dominance within the next few decades. In this environment, what can you, as an investor, do? The key here is diversification. Don't rely too heavily on any one country, especially one as unstable as China. Look to markets and industries that are less vulnerable to China's rise and fall. Invest in industries that will benefit from these shifts in technology, like electric vehicles, renewable energy, and cybersecurity. This will help protect you from the turbulence that's shaking China's economy. The economic slowdown in China, ESNT, just something to watch from a distance at S, already affecting us all. Understanding how these shifts impact the global economy will give you a significant advantage when it comes to protecting and growing your wealth. Section 3. Europe's struggles. Germany and France. Germany, once the economic powerhouse of Europe, is now in trouble. For years, Germany has been Europe's engine, driving the region's economy with exports and strong manufacturing. But now, things are different. Germany is facing a major energy crisis. It relied heavily on cheap Russian oil and gas, but now, with the war in Ukraine, that supply has been cut off. This has led to skyrocketing energy costs, making German manufacturing less competitive. The country is also dealing with a shrinking population, similar to China, though not as severe. Germany's population is aging, and fewer young people are entering the workforce. This demographic shift is another long-term problem that will make it harder for Germany to grow economically. France is facing similar problems. High energy costs and rising inflation, the French economy is stagnating. Effects of Brexit have been felt across Europe, and France has not been immune. The economies of both Germany and France are slowing down, and this could have devastating effects on the broader European Union. As these economies struggle, what happens next? Europe could face a deep recession if the situation doesn't improve soon. But as an investor, you can look for opportunities in countries that are less affected by these challenges. While Germany and France may be in a slump, other markets in Europe could offer opportunities for growth. Europe's struggles are far from over, and the economic landscape is shifting. But there is still potential to find bargains and profitable investments, if you're willing to look beyond the headlines and into the underlying trends. Section 4. The U.S. economy. Strength or fragility? The U.S. economy has appeared strong in recent years, but is it really? The truth is, the U.S. economy is built on a shaky foundation of government debt and money printing. In the past 5 years, the U.S. has added $50 trillion in wealth. But much of this has been artificially inflated by government spending and monetary policy. The government has borrowed trillions, and the Federal Reserve has printed even more money to keep the economy growing. But this growth has come at a cost. The U.S. national debt is skyrocketing, and the wealth gap is widening. While the stock market seems to be booming, the underlying economy is struggling. Inflation is rising, and the cost of living is increasing for most Americans. At the same time, the wealthiest individuals are reaping the benefits of the inflated stock market, while the middle class is left behind. The economy isn't as strong as it may seem. What can you do to protect your wealth in this environment? Start by diversifying your investments. Don't rely solely on stocks and bonds, especially when the market is so overvalued. Look into real estate, precious metals, and other tangible assets. These assets hold value and can protect you against inflation and rising government debt. The U.S. economy is not as strong as it looks, and it's crucial to recognize the risks that come with this illusion of strength. By diversifying your investments and preparing for a potential market correction, you'll be in a much stronger position when the economy faces its next big test. We've covered a lot today, from the economic turmoil in China to the struggles in Europe and the U.S., and how all of this affects your wealth. The key takeaway is clear. The global economy is changing, and it's crucial to take action now to protect and grow your financial future. Diversify your investments, stay informed, and position yourself to benefit from these shifts in the world economy. If you found this video helpful, make sure to hit that like button, subscribe to The Passive Path, and leave a comment below with your thoughts. Share this video with someone you care about, because the more people who understand what's really going on, the better prepared we all will be. Good luck out there, and feel free to check out our other videos for more insights on wealth building strategies. I'll see you in the next video.